Hello, ladies and gentlemen. It's Wednesday investment show, ibmtv, and we start right away introducing our guests. It's a brilliant legal and business mind, Nick Paleveda. Hello, how are you today, Nick?
Hello, Sasha. How's good to talk to the star of the show, Sasha's star.
Thank you so much. And also, I would like to introduce Rakesh. Both Nick and Rakesh appearing for the first time in this investment show, and it will be a very, very interesting experience. Well, as we know, the market has been quite choppy in the last few days. It seems to me that it doesn't really know which way to go because election is coming. So there are so many pro and cons for market going up or down or stays the same. Right? So we are trying to mitigate and do our best what we can. And so, as I always used to say on this show, the preservation of capital is far the most important thing what we can do. It's not so much about doing a crazy thing and trying to do killing on one of those positions that you might have, but it's a preservation of your capital. So you have a portfolio. You have to have a core holdings, preferably bringing in substantial dividends if possible. And the rest, it's a tradable position. So it would be nice to have 90% in a core holdings and 10% you can use as speculative investments or so on. However, I don't do it myself that way. I'd rather do 80% of solid producing dividends investments, and 20% it's a tradable situation, which sometimes, like in the last few days, could go, some positions at least, did go against me, at least personally. Maybe some other people are making money and laughing at me. But however, I have to deal with the cards what I was dealt with and do my best. For example, I'll tell you a couple of positions that I entered and which went against me. One of them was when Goldman Sachs was up to around 200 points or so. I sold, remember, always sold. I don't buy options, I sell options. But it's something to do with my greediness. You know, I'm very greedy when it comes to investments, and when people are paying me thousands of dollars for some positions, I take it. Of course, I assume the risk. So when stock was about 200 and some, $202, don't exactly remember, I sold September 25, which is coming Friday, expiration, at 192.5 puts, which is deep in the money, at least at that time. And I thought that I will just keep premium and then we'll sell some other puts, because I think that Goldman Sachs is one of the icon of American investment banks, and I feel quite comfortable with this company. However, what's happened with the latest downturn of the market, the stock went down to around $190. So now, okay, of course, I knew that that's quite possible scenario. So now I have two options. Option number one is just to be exercised at the 192, and with the premiums that I got, I would own 500 shares of Goldman Sachs. My price would be $192.50. However, stock is now 190. So I would, at least on the paper, I would lose $2.50 on each position. However, I've got premium at the time. I was paid. Actually, I was paid 2.65 approximately. So essentially, I would still have a winning trade, but not the way I want it to be. I didn't want to just ended up having stock at approximately the same price as he paid, so there is no winnings as we speak. However, I can then sell covered calls and still work with this position. It may be that one of the ways of doing with this situation. Now, I've chosen a different way of dealing with it. What I did rollover of this trade. What I did, I retired this calls, sorry, the puts that I sold. I bought them back, and at the same time, I've sold I'll tell you exactly what I did. I've sold January 15th puts at 190. Unfortunately, there are no 192 and a half puts in January, so I could sell 190 or 195 to be reasonably close to the positions that I've chosen at the time. I've decided to go a more safer way. So I've sold 190 puts. However, I got really juicy premiums. Believe it or not, I was paid $14.91 for each put I sold. This is incredible premium, and I'm very happy with that. And the only thing is that now I will have to be in that position at least until January 15th. So, in practical terms, what it means, it's stock is now $190. Okay, if I got the premium 14.91, say let's put it as $15, right? So now my price, if I will be exercised in January, my price for Goldman Sachs stock will be only $175, considering that it was a few months ago as high as 250 a share, and unless there will be a severe market crash. So the Goldman Sachs, I figured out, will go down as much as $150. So I'm willing to take a risk because what's happened is that by January, I will revisit this position and probably I will close it at the price at the time, and I will sell newer, maybe March or even June puts as well. Most likely scenario is that this position, the puts will be worthless and will just expire by January. That's most likely scenario. That one position. How about you followed up everything what I just said? Is first of all, did you get that everything what I've just talked about? And if yes, what's your opinion on what I did with this position?
Yeah, I mean, the thing is, it sounds pretty interesting in terms of that you're actually guarding your downside in a volatile market. But
Preservation of capital.
yeah, preservation of capital. And when you said that, Sasha, here's the problem I have with preservation of capital, but I'm heavily into cash right now. And the real problem is we're not earning anything on our cash position. So I've talked to our people. We'd like to get out of cash, but we're very cautious as to where we should nimbly go to invest our funds. There are a certain amount of funds I can't because they're pension funds. I can't do much with them, but then there's a certain amount that I can, and we talk about in our office every week. Where do you go for a person who's conservative? Well, you said preservation of capital. You don't want to lose capital, and you don't also want to get in the market. But we just can't. I don't see how we can stay in cash with these interest rates so low.
What I would recommend, Nick, that you suggest to your partners, put a small capital, I don't know, a couple $100,000 so we can start with, and give me administration of the account. So the money is yours all the time. The only thing is what I can do is just to operate the account, and we can formulate the formula of my compensation, and in some scenarios I can even guarantee the losses. So we can choose one of the ways, and you'll just see how it works. And
Okay.
if you're satisfied, then we can increase the
Right.
amount.
Yeah, I'll talk to Mr. Max about that because
Absolutely.
I mean I don't mind sitting in cash, but frankly, as we sit in cash, we basically lose money, over a period of a year. It's just not going to be a fun thing to be in. But at the same time, we don't want to take any risk and drop everything in the market because that would be, I think the market is a little high right now, and I'm waiting for October, in other words, to end. And then after October, I may be waiting for November to end, depending on the election. In other
You
words,
see, if it will be
yeah,
contested election, it can go on into January or maybe even February,
yeah,
and yeah, it's unclear. So which way
right.
to
And,
go.
and and the COVID-19 situation here has not been cleared up, and I do not see I don't see the end of. I've done no planning in terms of traveling or doing much except staying here because of the COVID-19 situation. So
Okay.
yeah, long-term planning is very difficult. So are you looking at any potential stocks in terms of investments? In other words, is there anything hot out there in the marketplace that you're looking at right now, Sasha?
Yes, absolutely. As you know, I mentioned several times that there are six super stocks, which, in my opinion, almost insulated from COVID-19 issue. Um, and it seems to me that in this environment, when there is virtually no profits in fixed income, I think people have absolutely no choices to go into stocks, whether they will buy one of these six super stocks or they will buy some other stocks. For example, like I told you about core holdings, for example, one of the big holdings that I do have uh, is Altria Group, for example, which is paying almost, believe it or not, 9% dividend. And this company just a few months ago increased its dividend. It doesn't look like it's going to cancel. But you see, what's happened when they increased dividend, stock was somewhat higher. So at that time, it was paying about 8.5%. And because stock went down in the last few weeks, now it's paying almost 8.86%. It's almost 9% dividend. And I'm also selling some covered calls against the position. So that creates very good income proposition and profit. So this one is one Canadian bank is quite good at paying dividends. It's a Canadian Imperial Bank of Commerce. It's paying about over 5% dividend, and Canadian banks are quite solid, and I don't expect a lot of problems there. Um, there are a few other, for example, I keep Gabelli Investment. It's a dividend and income fund, and that one is paying almost 8% dividends, and it's very well managed. And what I like about this particular one is it's paying dividends every month.
Really, the Gabelli income fund's paying dividends every month.
Yeah, believe it
Wow,
or not, yeah. For the last several months, it's paying monthly
really?
dividends.
Wow.
Yeah. So
Yeah,
this one is
yeah,
really good.
yeah. But when it comes to efficient markets, how can they pay such a huge dividend? I mean, the thing is, Sasha, I always think if you're paying it today 8%, that is way above market rates right now. How can these companies pay 8% and sustain their business models at the same time?
Well, what's happened is that 8% represents what's figures that we have today. Obviously, if the stock will go, or this fund units will go higher in price, so the dividend will be lower than 8%. It will go down to maybe 7.5%, maybe even 7% or lower. However, then you'll make money on a ascending price. So, I mean, uh, I was following this fund for the last couple of years, and it seems to me that they're doing very, very tight ship, and they are very doing very prudent investments and profits, and it seems to me that we are okay, at least for now. Again, I'm not going to guarantee that this will go on forever. However, who knows? I mean, it might even increase dividends in near future. That's also a possible scenario.
Hmm.
He's a brilliant fund manager.
Yeah.
Rakesh, what do you think about this investments as I described?
Actually, I'm completely a novice about this. I absolutely, I know that sort of vaguely know what a put is, and
Hmm. Well,
so it's a sort of a gamble on the future price of
no,
something.
it's very simple, Rakesh. Put is a contract. It's a contract between seller of the put and a buyer of the put. What
Mhm.
means put? Put means if I sell the put, I have an obligation to buy certain stock, whatever I sold the put on, to buy that stock at certain closing date of the contract, which means expiration date, at
Okay.
certain price. So, for example, in that example, what I've described, I spoke about Goldman Sachs, right? So now, after rollover, which I did just, I think, yesterday. So basically, my situation is as follows: I must, I must buy stock of Goldman Sachs at $190 a share
Yes.
by 15th of January of
Okay.
obviously next year. What that means, let's see, for example, if stock is trading 195. Nobody will sell me stock at 190 because you can sell it on the market at 195. So that means in this scenario, the puts will expire worthless. So all the premium, what I was paid for these puts, will stay on my account. Now, if stock will be lower than 195, let's just, sorry, 190. Let's say stock is 180. Now somebody will obviously will sell me the shares according to contract at 190. And stock is trading now 180. So I'm taking $10 loss.
Lots. I see.
However, yeah, but remember I told you before that I was paid almost $15 for each put. So even if that scenario will take a place, I'm still up $5 on each
Yes.
stock, on
Yes.
each share. Okay, that's how it works. Now, if it will be 175 on 15th of January, then I'm break even.
Hmm.
Now, whatever it will be lower than 175, then I would take a loss. However, that loss is not engraved in stone because obviously I can take the stock and start selling covered calls against the stock and recover my money this way. Or I can do the same thing what I just did yesterday to roll over, for example, January puts to March puts, for example, right? So
Extended another 3 months.
yeah, so it's a very similar situation when you're playing a chess game, right? So
Hmm.
you're looking at several moves
Positions.
and you calculate what you are going to in this case, what you are going to in this case, what's happened if stock runs away. For example, sometimes, not now, because I think the stocks are going through certain, they're trying to find its trading range. Right now, it's still uncertain because of the election, because coronavirus, and so on. So the market is quite nervous. But this tells you exactly the story why these options, both puts and calls, they're so expensive because in uncertain market, the options, the premium is rising. And that's a time when you are selling the options because the premiums are incredible. Here is another position which I had to mitigate was stock. One of my favorite stock is NVIDIA. So
Mhm.
NVIDIA was as in it was almost just about 2 3 weeks ago probably when they announced a deal to buy this English firm Arms. The stock was almost $600 a share, and it went down. And I bought a few hundred shares at $513. Right now, it's trading in 501, so I'm losing say $12 on each share, right?
Correct.
So I decided, okay, here's what I'm going to do. I sold covered calls. I was paid for each call. It's we are talking about March 19th next year. Call expiration. You can't believe I was paid for each call $59.87. So almost $60 for each call. That's how high are the premium.
Premiums.
That's incredible. And actually, so what's my position right now? So my price of stock is $513. However, I got $60 premium. That means that the stock will go down to $453. I'm not losing any money. I'm still at the money. If it will close any dollar higher than 453, I'm making money. Now here with Nvidia, using that premium that I was paid, I almost I'm about to buy calls in the next couple of days. Probably on Friday I will do that. I will buy also calls, but far out of the money. It's very speculative situation. But why I'm doing that? Because normally I don't buy calls. I'm selling calls. But in this situation, I was paid such a juicy premium that tells me that people who are selling and this calls, they believe that the stock will run much higher and not in too distant future. And the fact is that the stock, as you know, was already almost $600, just about 3 weeks ago. So if that deal will be approved, stock may go to much higher level. So in order, now I'm very well protected on the downside, very well. But I won't also participate on the upside. And the only way to participate is either to buy more shares or to buy some calls. In this situation, I can afford to buy a few calls simply because I was paid very juicy premiums on calls that I sold, right? Um, oh, okay. Thank you for illustrating.
Yeah, I figured what I would like to do is look at NVIDIA, because is this the company that we were talking about, Sasha?
Yes.
Yeah, while you're doing puts and calls, I usually like to look at the fundamentals of the company, but perhaps
Absolutely.
perhaps it because when I lose money, it's because I tend to pull out of the stock market prior to letting it just go back up. If you look at the fundamentals, then the thing is, and you have strong fundamentals, even if you have that dip down in terms of preservation of capital, you just hold on it long enough, it goes back up. But if their fundamentals are poor, like JCPenney, which I never went into because I was concerned about fundamentals. I liked the pricing. I thought the pricing was good. I thought the 52-week high-low was good. I was more than happy to purchase the stock. It was a cheap stock, but then I didn't pull the trigger because of the fundamentals. Now, NVIDIA, when you look at it, it looks like and it looks like they're about to acquire ARM also as well. It looks like they're in the semiconductor, artificial intelligence, video games, consumer electronics, and computer hardware, all which I would say fundamentally are going to be growing sectors. Wouldn't you say that too, Sasha?
NVIDIA in many ways is unique company and its stock is unique. If you are talking about the fundamentals like book value, for example, it's relatively low on NVIDIA. Right. We all know that. Their growth is extraordinary. Its cash position is envy of many much bigger companies. And the management is second to none. And if that deal to buy arms will be approved, then we are looking at creation of a super cheap company because they will challenge then Intel, AMD, and many, probably all of these giants in the industry.
Yeah. Okay. Do you know what the price of ARM is trading? Because sometimes if there's a pending acquisition, the price of ARM will actually be lower than the strike price that NVIDIA is willing to pay for it, and you can play on that small differential. In other words, the offering price and I've got burned and I've made a lot of money on that little trade. The thing is, do you know what ARM is trading at and what the strike price is for NVIDIA? In other words, what NVIDIA is
Well,
asking.
we can look up at ARMS. I never looked at this. First of all, it's a British company. It's trading on British Stock Exchange. And you see, again, because my positions are tied up to the possibility of selling options.
Right.
And with NVIDIA, nothing can compare to the premiums what you can extract on NVIDIA options. It's second to none.
Really? Okay. So when you sell option NVIDIA, you get a good price for it? Is that what you're saying?
Well, I just told you that I have 500 shares of NVIDIA. I sold 5 calls, and each call generated $60, about $60. You know what is $60? It's $6,000 per position.
Right.
All I
That's
have to do is,
incredible.
it's incredible. I don't know any other stock when there are such juicy options. They're even more juicier than in Apple in a way,
Right.
right? So Apple is another brilliant company. It's one of those brilliant 6 unparalleled companies.
Mhm.
So, but Nvidia is still somewhat higher on my list even than Apple.
Right.
Nvidia is a really unique situation, and Apple is good, of course. So is Alphabet, so is Netflix, so is Facebook. So you can buy one of those. On Facebook, actually quite good options too, but not nearly as good as Nvidia.
Hmm. Yeah, and it looks like they have a strong revenue position, $11 billion in revenue, operating income $3.8 billion. During a COVID-19, I'm not sure they're showing 2018 data, but so we'd really have to project what's really going on in 2020. But when you're given the industries they're in, artificial intelligence, video games did not go down. Consumer electronics did not go down during COVID-19. Computer hardware did not go down. Semiconductors, to my knowledge, did not go down. So they're fundamentally in what I would say, a very strong position in terms of a company, on a going forward basis. That would be just what I'm looking at right now. But what strikes me is what you're saying. You're getting $60. Is that $60 a share on that?
Each share is
You know?
$60.
Yeah, well, you're just printing money, Sasha. They're just printing money and handing it to you.
Yeah, I mean, look, when you are looking at the fundamentals of NVIDIA, they're good.
Right.
Now, speaking about choosing this position, I'm looking at the movement of the stock in the last, let's say, 12 months. It's more than enough. However, in this particular COVID-19 situation, that's not fully represent the story, because there was a downturn in March, as we know, or so on. But still, you're looking as a rule, I would look at 12 months history of stock. Second, everything what you just showed as the fundamentals, I would spend no more than 30 seconds to browse through it, because all you do, you are reiterating what every trader, every fund manager, and everyone knows inside out anyway. And all that is part of the price of the stock anyway. So let's see, you're saying, well, the fundamentals are not so good, the stock is overpriced. And guess what? Stock is going higher 100 points, okay? So you say, how come the fundamentals are not supporting that? It should be much lower. But the price, the stock market is always right. And at this particular situation, many fund managers, and there is something else. The NVIDIA is so expensive stock that people like novice traders, day traders, and people who are buying shares in and out, NVIDIA is not on their list because it's very expensive stock, and somebody with a modest portfolio, what he's going to buy, 15 shares, 18 shares, they cannot move market in any substantial way. As with the smaller stocks, they sometimes do just by their movement in and out. So NVIDIA is quite insulated from this behavior, and it's part of any meaningful portfolio. If you will take growth investors, if you will take hedge funds, if you will take index funds, NVIDIA is always part of it.
It just went down to $4.99 a share, but it's basically $500 a share. So if you want to buy 1,000 shares, you got to dump $500,000 into the position, you know, to do it. So it is a little on the tipsy side. And when I also look at it, it's experienced a pretty large growth from, where was it, around 2009 to today. It went from like about $200 a share to $500 a share. So the people that held it for quite some time have doubled their money and then some, you know.
Well, I remember if you bought NVIDIA at $200, listen, I remember a time when I was buying NVIDIA for $12 a share.
Man, you're going way back. Let's go.
Yeah,
I have to go to the other thing.
I'm going about 10, 12 years ago. Yeah, it was $12.
Let's go. We're going to take a look at that in a minute, because here comes the history of that. Okay, I don't know if this shared on that, but if you look at the history of it, what you're saying is there it goes all the way back to 2017, not too long ago. And as you go back further, yeah, you're right. It was trading next to nothing, you know. So yeah, really, you could buy it at $12 a share, now trading at $500 a share. Now, Sasha, my question is though, why is it that students don't study stuff like this, which can make them fast, but can basically make them rich or frankly well off? Why isn't this stuff studied in schools? And why don't chess players spend more time here than with chess?
I'll tell you one thing, that teaching students stock trading, it's considered to be that whatever they learn, and they may do quite well for themselves, but they don't really contribute to society in any meaningful way. Mm-hmm. So why would anybody teach somebody to make money for himself, but without benefiting society? So let's see, if you're an engineer, you can be employed by one of the big companies and you're contributing, and maybe you will invent something and so on. Now, in a stock, apparently stock has a lot to do with chess, because in stock, what I'm doing, I'm planning a certain position with several outcomes. Depends which way market would go. And I have a strategy for each of the possibilities, how I'm going to mitigate it, and so on. So I'm never shocked or surprised if the stock going much lower, for example, where it's now, or it's going much higher, or so on, because that's part of the strategy, to have answers and to be able to mitigate the situation as it arises. So I'm planning several different outcomes on each position and act accordingly. So really, but there is a difference with chess. You see, the similarity is that in both cases, you are responsible for the end result. Like in chess, if you lost the game, you are, and nobody else is responsible for this. In stocks, exactly the same thing. If you did the right thing and the right moves, okay, you make some money. If you're wrong, you're losing money, but there is no one to blame except yourself. You're fully responsible for your decision. But the difference is, though, that in chess games, there is an end result. Let's say the game, okay, you are checkmated. Okay, so you start next game, next day, or in 5 minutes time, and so on. In stock is a different situation. There is no end game. You are in a game all the time. So if the stock is going down, it doesn't mean that you have to terminate a closed position, take your loss, and do something else. Sometimes it is a great thing for you to do, because stock may continue to go lower and lower. Okay, so there's the game. It's almost like a new game every day, or even every 10 minutes or so on, because the price is moving all the time. So you're sort of in a game which has no ending, because the stock market is here in 1 hour, in 1 day, in 1 week, 1 month, or so on from now. So you're in constant game, which you're allowed to terminate the game in either development. You can win some money on your position, and you can terminate that and take your profits. And that's exactly what I did with General Electric. The stock, which is not
I'm going to go to General Electric because see, you introduced me in the video, which I haven't really looked at, but General Electric I have been following. I haven't pulled the trigger on it yet because it seems like I'm not sure where that stock is going.
You can wait a long time before you pull the trigger.
Well, I don't have any problems because what was the first rule again? Preservation of capital, right? Right. So the thing is, I would rather preserve capital than pull the trigger on a stock that I'm just not very sure of right now, which is, let's see if we could switch it over to General Electric, see what they're doing.
Yeah, it's a wonderful company. Used to be 20 years ago. Right now, it's it's a joke.
Well, the thing is, again, looking at the fundamentals of General Electric. Group, $6.22 a share, and even if we go 5 years, here you go. Look at that. I don't know if you can see that. Let me go see the screen, see if you can see what's going on with GE. Yeah, you can see GE. It's all that red stuff. Okay, but see, here's the problem I have with the fundamentals of this particular company. Again, looking at the fundamentals is that they were into aviation. All right, at the top, they developed a lot of the engines that run airlines. How is the airline industry doing right now, Sasha?
Well, I know actually a couple of people who are buying airline stocks these days.
Yeah.
I don't touch them because I don't think the divorce is behind us.
Mm-hmm.
So there is still probably more ways for them to go down.
Right.
Well, you can look, probably the mother of all aviation stocks is a Boeing.
Yeah, Boeing. Right. Yeah. Well, I haven't checked Boeing, but when I looked at this, first of all, I kind of liked the price at $6.22 a share when they were several years ago around 30 a share. So I look at, wow, they have a lot of upside potential. But then
it's
when
a different company today than it was.
that's the problem. First of all, I know in the finance area they got clobbered. They didn't really know what they were doing. Got hurt pretty bad. Healthcare, the same thing. Aviation, not so good. Renewable energy, digital industries, addictive manufacturing, and venture capital. They may not be so bad in those areas. I don't know. But see, the real problem is every time I look at this, I go, they got a lot of revenue. They have a great brand name, but they're in sectors that I just don't find exciting. You know, I find them to be problematic, and especially with building airline engines. So that was I like the price, but I don't know if I like the company. Is that possible?
Remember my last trade on General Electric was a very simple one. I bought some stock at around six.
Right, I remember that. Yeah,
it went up to 7 at 6.75, and I bought the stock. I saw covered calls, and I have large position because stock is so cheap. It's not Nvidia, so I was able to buy a large position.
You're right.
50,000 shares, and I sold 500 calls. And then when the call expired, I terminated all position. But I made money on calls, not on the stock.
Yeah, right. No, I'm hearing you loud and clear. You make it on calls, not the fundamentals of the stock. The thing is, but if I wanted to get a position of 1,000 shares here, it's only $6,000. Where if I want 1,000 shares in Nvidia, it's $500,000. I mean, you got to move some serious capital over in that director.
Appreciate the difference.
Yeah, there's a big difference on that. So what's the other stock you were looking at? Was it called Altria?
Altria.
Let's go Altria.
A symbol MO.
Oh, we got Altria's stock. Okay, not so bad. Let's go to 5 years and take a look and see what they're doing. Boink. They're $38 a share, and fundamentals. What do they sell? Oh, here we go. Cigarettes, cigarettes, and related products out of Virginia. So the thing is, they're in the sin area, and they pay. But you say they pay a pretty good dividend.
Well, you can take a look.
8.95%.
Yeah, and they raised it just about 3 months ago. They raised the dividend.
And is this the company that pays it quarterly or monthly or whatever?
No, not that one. Yeah.
What's the one that pays it all the time?
It's Gabelli.
Okay, yeah, we'll look at Gabelli next. Okay.
Yeah, look at Gabelli. Yeah. I think several different funds, but the ones that I choose was dividends and income fund.
Oh, the dividend income fund, right? Yeah, so this is going to pay a quarterly dividend then.
Yeah, this one pays quarterly. That's correct.
Yeah.
The beauty of the Altria, besides its dividends, is you can sell covered calls
Right.
to even generate even more income.
Yeah.
So this is maybe it could still go lower. I'm not saying that this is the bottom of the stock. It could go lower, but then their dividend will be yield will even higher. It will pay the
Right.
9.5%, right?
Yeah. Yeah, and I just don't see that going much lower. Just looking at where they're sitting at right now, is COVID-19 affecting people not buying cigarettes? Are people not buying cigarettes because of COVID-19? I just don't see that happening.
I think that they probably buy more cigarettes than because what else to do?
Right? Yeah, that's what I think. In other words, I don't see this being an industry that is going to fold overnight. In other words, because unfortunately they sell a very addictive product, and because of that.
And with a brand like Marlboro, I mean, which sold internationally, actually they're selling more cigarettes abroad
Yeah.
than in the United States. So, in my opinion, it's quite stable company. Now, for you to understand why the stock was moving downward, and they've invested a couple of $1 billion in a cannabis grower company, in fact, Canadian company.
Mm-hmm.
And their stock went down big time. I think it's recovering right now, but what they did about a year ago, they just wrote it down, complete investment.
Right.
Company's Kronos Group. They completely wrote it down. So it's on a book, it's a zero right now.
Yeah.
So any upside on Kronos, if they will be any upside, hopefully there will be, then obviously they will start getting additional revenue stream, and their positions. They have probably 50% of this company, Kronos Group. So
Really.
it could appreciate, but even without this, right now it's zero on its books. So that's why stock obviously went down. You see, remember, Philip Morris was one company. Now, what they did in order not to dilute investors who don't care about this cannabis Kronos story, they separate company in two. There is a still Philip Morris company. It's trading about $75 a share, which did not participate in this transaction, and Altria Group, which is also Philip Morris, but which did invest in Kronos Group. So obviously, the stock went down as they wrote it down to zero on its books, but that's about it. So all the bad news are hopefully out. That's where the stock is. They still sell Marlboro all over the world, and well, we'll see which way it will go.
Yeah. I just don't see this being a bad place to park funds for a while. And
Absolutely.
then, like you said, you can also do covered calls out of it too as well. So it seems to me this would be a popular stock for you, wouldn't it, Sasha?
Yeah, it's one of my core holdings.
Oh,
I
really?
do.
Okay.
Yeah. I have about 1,000 shares, and I'm selling from time to time covered calls. And I do, normally, if I'm losing on calls, let's see, I roll over to the next month or next 3 months or so. So also, and because they're covered, I'm not
Right.
scared of stock being called away because I can
Sure.
always settle and sell the following calls, the following 3 months position.
Yeah, right. Because your calls are all covered. And,
Yeah,
what-
they're covered.
and what was the other income? It was Gabelli?
Yeah, Gabelli Investment and Income Fund.
See if we can find that one on the big boards.
Mhm.
Equity Income Fund. Here we go.
The only problem with this one, there are no options. So,
You can't win all, can you?
so
There it is, the Gabelli. Oh, wow. Mario Gabelli is the CFE. He actually operates this fund.
yeah.
Wow. Okay. Yeah. He's a pretty well-known
Mhm.
investment manager.
Oh, yeah.
So
He's
yeah,
very solid.
and he's got a nice amount of assets involved. He's got about 900 million. It looks like in that. Boy, returns are pretty good. So they're pulling out a 9.5% return.
Wait a moment. I'm not sure that you're looking at the right one. It's
This is
Gabelli
Gabelli equity income.
Fund. No, I'm talking about the Gabelli. Okay, let me find it. I'll tell you the symbol. So
Well, this one's pretty good. 9.5% isn't bad when you're sitting in cash at 0.9%. You know, that's not good. Can't even fighting to get 1%.
Now the symbol is GDV.
Let's go to GDV.
Yeah, go there. It's down 9 cents today.
Yeah, but I better put GDV fund. Gabelli dividend and income trust.
Gabelli dividend and income trust, correct.
Okay, I think we got it on the boards here.
Okay, great.
Right, 1817 dividend yields around 7.26%. Yeah, which is actually really good. And you say this pays monthly or?
Yes, monthly.
Wow.
If you look at their news, I'll tell you what it is.
Yeah.
Okay, Gabelli dividend. Okay, the board of trustees of the Gabelli dividend and income trust approved the continuation of its policy of paying fixed monthly cash distributions. The board of trustees declared cash distributions of 11 cents per share for each of October, November, and December 2020.
Mm-hmm. Yeah, why did they have a big dip in March of 2020? They were at 21 a share, and then all of a sudden they dropped all the way down to $11 a share.
What was market? Remember the March when all the market tanked, and so their fund tanked just like all market.
Right.
You see, what's happened is that when the market drops such a substantial as it was in March, people are sometimes liquidating positions which they would normally never liquidate it, but they're squeezed, especially those on margin. They're all squeezed, and they have to generate cash any way they can. So if they're giving margin calls on their account and they have Gabelli, so they sell Gabelli just as well. And unfortunately, in times like this, market makers, they all step aside. There are no bids.
Mm-hmm.
So any stock, even Nvidia, even others, they're just dropping like a rocket simply because there are no bids.
Right.
Let's see typical market maker, what he does. Let's see Gabelli was, say, $20 a share. So they're offering 1,000 or say 10,000. They offer to sell at 20.
Mm-hmm.
They're offering to buy 1,019 and a half. Once the order filled, they put next order $19 for 1,000 shares. Once that is filled, the next comes 18.50, 18, and so the stock drops down simply because of the market conditions. It's nothing fundamental. There were no negative news releases that would drove investors down to start selling that stock. It's just overall market conditions, margin calls, and etc. So the stock went down just as all other stocks. There's no exception.
Yeah. Yeah, but this doesn't seem like a bad place to park funds rather than put them into cash, put money in cash.
Yeah,
right?
I would consider this quite solid. Let's see, even if let's say you buy it at 18 and let's see it drops down to 15. Okay.
Right.
Okay, so you are now in a paper loss. But with your dividends coming in, it'll take a couple of years, just dividends, to rebuild your initial investment. Plus, you still have a stock which most likely will appreciate in price.
Right.
I have one question which I'd like to cover.
Sure.
Why would you buy calls so long away? He's talking probably about Goldman Sachs, Nvidia, which I just previously described, in March versus December, 6 months away versus 3 months. Pros, cons, 6 months may be more stable, 3 months more variable. Well, when you are buying, which I hate to do, I normally don't buy options, but if happen to buy, you normally buy farther out of the money simply because you have more time on your side. Now, the difference in price, let's see, is not that significant. Obviously, December calls are cheaper than March calls, right? But so I see with this election and so many things in play, even there will be a downturn, it may not go into price that I have in mind, say $600 a share by December. Very unlikely, in my opinion. However, it is very likely in March, because by March the election will be over. There is more opportunities that some kind of vaccine will be found and available, or so on. So I think, and yet another consideration, like in my particular situation, is that I sold March puts. So I would like to stay in overall my position tied to one expiration day, both puts and calls. So it's easier to mitigate for me both sides of the equation and deal with that. Because if I sold March puts and bought December calls, there is a big risk that they would expire worthless. So then I would sell March calls anyway. But at that point, the premium will be much less than it is now, right? So right now, with these premiums that I got from Boots, I feel very comfortable to acquire the March calls at the same time. So I keep my upside as well. Because what's happened? Let's imagine that I sold these puts. The stock indeed went up to 600. The deal with ARMS was approved. Everything is great. The earnings are great as usual. Don't actually forget one thing. If you're looking at earnings surprise on NVIDIA, they have the highest marks of all stocks. Their earnings surprise are second to none. And obviously that also reflects in the price of the stock. Okay, so in this case, let's say I will keep the premium, but stock will be taken away from me at 520 because I
Mhm.
sold 520 puts. Okay, so I'll make a little bit of money from 513, which is my price, plus $7, plus $60 that I got a premium. But that's it. Let's say stock is $600, maybe $700. I don't have any upside, right? Because the stock will be called away. So if I will buy now the calls using premium that I derive from selling puts, then I still have substantial upside just as well.
Mhm. Now, Sasha, you've been a piano master, a chess master, and an investment master. Of those three, what did you make the most money on? Investing, playing the piano, or chess?
Okay, let's go step by step. When I arrived to Canada in 1975, I had a degree in music, and just a year, slightly more than a year, being in Toronto, I was one of the top three pianists in the Toronto area, and I had my orchestra and so on. So I was making very good money in music.
Mhm.
However, in 1986, when I first invested in a stock, which was a company run by Grandmaster Duncan Saddles,
Mhm.
and I fell in love with this, and I bought stock, and I made five times as much money in 1986 from the stock than from playing piano and all other things. So essentially, I finished my musical career in 1992. That was my last contract, and I didn't renew it.
Mhm.
So by that time, however, I already had my own public company, which was trading then on Vancouver Stock Exchange, and obviously that was on the foreground, and from that point on I did a lot of money in investments, and also I did the consulting for companies which were about to become public, so I did a lot of consulting. And now chess was always on the background. I was never trying to make any money out of chess, and even today I'm not trying to do that, although I do have a venture, as you know, but that's more for my soul, not so
Right.
much money. It could change actually anytime, but
Mhm.
the way it was, simply because my wife, Nava, she was a Canadian champion 8 times and played in 14 Olympiads, and I traveled with her very often. And actually, I was introduced personally to all grandmasters, greats like Karpov and Kasparov and many others. I know them all personally.
Mhm.
So, so in chess, now since I developed this new way of chess competition, which in fact probably will become a superior form of chess competition simply because of negatives of online cheating in chess, the death of the regular offline over-the-board tournaments and matches. And so I can see what I've devised as the future of chess, and I'm preparing now a plan how to monetize it. So that's probably will work out its way. Actually, I was contacted by after talking to Yasser Seravan just about 2 weeks ago. I was contacted by one of the two biggest portals about possible deal with them or so on, but I'll wait to see how it develops.
Right. But professional investing you've done since 1996, right?
Yes.
That is really perfect. Well, we're at the hour. I guess this is we thank all our viewers from listening. I always get a lot out of listening to you, Sasha. It gets my juices up. I go, gosh, I gotta do something rather than sitting on cash. And I'll have to talk to our people about that. But we want to thank everybody for investing with Sasha. I've got to get some other people watching this show because, hey, listen, if you're not playing this game, I don't know what game you're really playing. So you're playing the wrong game. Let me tell you that. You better learn how to play this.
I totally agree.
All right.
agree.
Thank you, Sasha.
Okay. Thank